So right. Market outlook, folks. We saw finally the parabolic run has come to an end, at least for now. We saw the sell-off in the SPY, and it was especially dramatic in the NASDAQ names, and that's where we're really seeing it right now. So all uptrend. We've kind of focused on this obvious, very support line, this ascending trend line in the NASDAQ. And it's very obvious. And now we're kind of testing the area. We're struggling to break down from the area right now. It's kind of an inflection point. I think if we break this area sharply and we see some downside follow through, we could probably test. We could see this correction get pretty ugly. But I mean, if they put up a fight right here, we could see a turnaround right in this 270 area. I'm not really sure. Bennett, what are your thoughts over here?
So I'm going to I have a couple of charts I emailed you over, so we'll start with the NASDAQ first. The main premise of this was just, for us, again, the big picture with the newsletter, we focus on dollar cost averaging in the major markets as well as the sectors, and there also is time to rebalance and take some profits in some of the overextended sectors and markets, and then putting them back to work in some of the ones that haven't been performing as well. So we have a quick little rundown. We have, for NASDAQ, we had the lines run out. We were just moving up this trailing stop, and we luckily got stopped out before this little pullback. Next up, we have same thing with the SPY. You can see these little green dots. Those are the times that we're buying your dollar cost averaging higher in the SPY the past few months, and it's been probably one of the easiest dollar cost averaging times that I've ever seen, where you just bought and it just kept grinding higher.
Wait. What about this first green in March? I don't see another green until mid-April. Was that part easy? Was that easy?
That was not.
That was not easy. All right.
That was not fun. Right. Not fun at all. Though after April, it got very easy. But that was all right. Not fun. But yeah, so you'll see a similar theme going through the SPY, VCR, BDC, and VGT. Same theme. Again, dollar cost averaging up. Wasn't very easy in February and March or April, but it did get easier after that, the last quarter or so. But again, in all these sectors, they ran tremendously, and we kept upping these stops and dollar cost averaging on the way up. We did start to get stopped out of some of them for profiting, and not the entire position, but for some of the higher cost bases in these sectors. That's what we want to take off first, so we still keep that better stock, from March and April. And then what we want to look to the sectors that haven't been as hot. The utilities, the REITs, energies, and financials have been, four of the sectors that haven't really participated as much in this overall rally. So when we talk about rebalancing as a whole, we sell some of those leaders like technology or healthcare, and then we rotate back into some of those sectors that haven't been as much in play. Because again, we're looking on a much more longer time frame, not as intricate as the swing trades that we take. So that was kind of the overall lesson this past week that a lot of members did take advantage of that weekend using the stops up. That's my little piece for this week's shape.